Hello? 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 This is the Vancouver
Commercial
Real Estate Podcast.
And welcome back to the Vancouver Commercial Real Estate Podcast. I'm your host, Cory Wright.
And I'm your other host, Adam Scalina.
AKA my boss.
Yeah.
So this morning before getting here, I'm thinking this is, Jeff Bezos had this planned, I think. Like timing couldn't have been any better. I'm driving here and I get an email from Amazon informing me that I'm not taking full advantage of my Amazon Prime membership.
Which you can thank me for.
Yeah, and I literally almost wanted to send you the email and say, hey, can you?
How are you not using Prime? I think of all the different subscriptions I have, Prime, do you order a lot of stuff at home on Amazon?
I don't. My wife does, but we don't. So now I think I told you this before. Because I spent the $80, I've now converted all the offices where all the office supplies comes from Amazon now, so we can at least put our Prime membership to work.
Oh. Man, well, that's and you know what the other thing is that the Prime, the TV Prime, I know you don't watch a lot of TV, but have you been looking at least at Prime as an alternative to Netflix?
Well, you know what, I'm watching Suits on Netflix probably for the 8th or 9th time front to back. There's not a lot of good TV on at 3 a.m. when you wake up, so I get a good episode of Suits in before I hit the Peloton.
Is that how you start your day?
Yeah. Yeah, and
I don't think you're doing the 5 a.m. club, right?
And depending on what I wear that day, it depends on what episode of Suits I watch. So if it's kind of cloudy and dreary in the New York setting there, and Harvey Specter's in black with a gray tie, that's what I show up looking like.
Even if it's a heat wave in Vancouver.
Oh yeah, it's
You're in your turtleneck.
Yeah, but I was interested because you guys were talking about Succession. I caught your this week's episode.
Yeah.
I'm thinking, finally, you guys are getting into some good programming now.
Oh man, you know what's crazy is I'm doing a second lap through Succession right now, and I forgot how good it is. But the first season, there's some. It's just.
I think isn't Will Ferrell one of the producers of that show?
Is he really?
I think he is. I think someone told me that a long time when it first came out, because I was sort of stuck on Billions.
Yeah.
So I got the Billions, I got the Suits.
Have you gone through Billions? Is that?
Watched everything front to back.
Really? And that's good.
I would say as the seasons go on, it's becoming a little bit more drawn. Kind of picture Entourage.
Yeah.
From a business setting where the main character.
Is it Paul Giamatti?
Yeah, he's in it. He's great.
Yeah.
It's him, and I can't remember the other gentleman who plays Bobby Axelrod, but he's Daniel Day-Lewis.
Daniel Day-Lewis is in Billions?
No,
really?
I'm pretty sure it's Daniel. We might want to fact check
Academy
that before we put this out there, right? If he, can you imagine if he finds me on Twitter and says, you ever try to say that about my career again, I will find you.
From In the Name of the Father to Billions.
But it's the show is becoming a little bit more far-fetched, but they've kind of taken it to that Entourage where the main character will go watch a Metallica concert. And then Metallica will play Metallica, and they'll come up to him as if they know him because he's a billionaire. So they've kind of taken it down that Entourage thing where they've got celebrities that come in now, sport athletes that come in, and they all know who Bobby Axelrod is because he's such a hugely successful business person in the show. But he's kind of, I think he's, it's corrupt what they're doing and stuff. So it's.
I think it's. I'm just Googling this. I think it's Damian Lewis.
Oh no. Oh no.
Daniel Day-Lewis.
Well, this isn't going very well for me. I'm gonna get sued from Fido from about 4 episodes ago. I'm pretty sure this guy's agent, if by any chance we have more than 13 listeners this week, his agent's gonna reach out to me and probably threaten me now. This podcast isn't going as planned, Adam.
Yeah. Well, who do we have on the show today?
Today we got Pat Wood, who's in our William Wright Victoria office. And the interesting thing is he was probably the authority when it comes to appraising self-storage. And self-storage falls under the commercial umbrella and one of the fastest growing asset classes. So we were fortunate enough to pry him out of that industry and get him on our team because it's an asset class that's just booming. That demand is huge. People want it. We want the top guy. So we got him out of that industry, got him in with us. been phenomenal ever since. I've never met a guy that knows so much about self-storage.
It's obvious in this show too. I mean,
it's incredible.
Like we ask him a lot of questions. We cover the whole self-storage landscape here. And then he offers some investment. And this is the thing, is a lot of people listening are probably thinking, well, self-storage, I need a lot of money to get into this. But it turns out there's actually avenues for investors if you just want to get a piece of the action. And there's a lot of action.
Yeah, and the returns, like, the returns they put out there. And when you sort of think about it, and he talks a little bit about like the lease terms and the potential increases on rents and stuff like that, it makes a lot of sense from an investment standpoint. Like picture it's like a multifamily building with 100 doors.
Yeah.
Right. But you're getting a lot more on a monthly basis for the size of the door that you're leasing out versus, say, a multifamily building.
And no kitchens, no bathrooms, no plumbing,
nothing. Like he was saying too, that you don't have to change your roll-up doors because they're guaranteed for 100,000 roll-ups. Like it's just like you hire one or two people to sit at the front and you're good to go.
Yeah, no, I love this episode. And we had on our show, Vancouver Real Estate Podcast, a while back, we had the nationwide storage, which is all over Vancouver now. So we talk a little bit about that and that investment opportunity as well. This is a fantastic show. So all things self-storage with Pat Wood. Cannot wait for this. Before we get to that, though, Cory, we have a sponsor.
Impact Commercial Group, with over 50 years of lending experience, and for all your commercial lending needs, please visit them at impactcommercial.ca. And Alan, the guys over there are phenomenal, so make sure you reach out.
Yeah, for sure. And without further ado, why don't we cut to our conversation with Pat Wood?
Enjoy, guys.
Okay, so we're here with Pat Wood, commercial broker at William Wright Victoria office, right? Self-storage specialist. How you doing, Pat?
I'm great. Thanks for having me on the podcast.
Pat, can you maybe start by telling our listeners a little bit about yourself?
Yeah, so I started off my career in commercial real estate as an appraiser, did a bunch of commercial work, and then moved into the self-storage world. I had an opportunity to become the director of Canadian Self-Storage Valuation Services, which is the premier self-storage appraisal firm in Canada. Got to speak at all of our national conferences, work with all different ownership groups, individual mom and pop shops and everything. And that was for about 6 years of my career. And then most recently, I've joined William Wright on the brokerage side.
We pried him out of there. We had to rip him out of the appraisal business. He was the authority, and the asset class was growing too fast. We needed to find the best guy in the business, so we had to crowbar him out of there.
Very happy I made the move.
Right.
So, Pat, one of the biggest reasons why we wanted to have you on is, for some people that don't know, self-storage sort of falls under the commercial real estate umbrella, and more importantly, probably under the industrial type umbrella. It is just an asset class that seems like over the past 5 years, maybe decade, and you'll know better than I will, that's just like roaring, and you can't find product, and it seems like the numbers just go up every day if you can find stuff. So maybe, can you unpack for our listeners, what is self-storage? Like what is it? Why is there this huge craze, and why is it booming so much?
Yeah, so self-storage in its infancy started as a way of land banking. People had land on the outskirts of cities. They didn't know what to do with it. The US started self-storage in the late 60s, early 70s. Canada kind of came behind in the mid 70s. And you'd build these kind of single-story, prefabricated drive-up facilities, and you still see them in smaller towns or on the outskirts of cities, in places like Vancouver, even Victoria, Toronto, Calgary. All of the sort of single-story facilities and the cores have been redeveloped because the land's just too valuable. So yeah, originally I have a piece of land, I want to generate some revenue. Let's put storage on it, and then when we're ready to develop, we'll redevelop it. But a lot of these facilities started making so much money, it didn't become feasible to redevelop the land. And now we've moved into these multi-story, high security, climate controlled facilities you'll see in major metropolitan centers that, are probably one of the hottest asset classes in Canada right now.
Now, when you say land banking, just for our listeners there, that's sort of referring to, people are buying land with future intentions, and they're putting something on that land to generate revenue to service the debt in the meantime. Maybe like a golf course, for example. That was traditionally how self-storage started, and then obviously became much more desirable.
Exactly. Yeah. When you have multiple acres of land and the bank wants to get paid every month, you got to figure out what to do, and storage fit the bill for a while. And then it kind of became a lot of people's actual main business rather than, we're going to develop this later.
One thing you said there was single story. And for people that drive around and see these things, they almost look like mini apartment buildings now. Is that kind of the trend? Because demand is so high that these guys are building multi-level self-storages now?
Yeah, it's partially due to demand, but it's also due to land value. One of my former appraisal clients, a very good friend of mine, opened a facility in Vancouver about a year ago, and he paid about $12 million for half an acre of land to build his facility on. The only way those numbers work is if you go multi-story. He built 5 stories.
Wow.
So yeah, in any major metropolitan center, you're going to see, 3, 4, 5, even 6-story facilities. North Vancouver, there's a 6-story plan, but the original plan was to try to build 12, but the municipality wasn't that happy about a 12-story facility.
They're not yet keen on the self-storage office tower look yet.
Not yet. But if you go to places like New York or LA, you'll see 10-story storage facilities because, again, land value is so high that to get your revenue back, you need that much density.
Wow. So I think here's the obvious question I think everyone's thinking right now is, who rents these? Why do they build them where they do now? Because now you're seeing them pop up in, East Vancouver. Why?
Yeah,
who rents
some of
these?
The most expensive spaces.
I know.
Too.
Who rents these?
It's funny. Yeah, it's funny you say that about the expensive spaces. So the most expensive storage in North America, depending on the exchange rate, is either a facility in San Francisco or a facility in Kitsilano, depending where the Canadian dollar is.
Wow.
And a 5x5 unit rents in those facilities for about $125 a square foot.
Wow.
So the revenues are huge. And for clients, typically we were seeing, the clientele being about 75% consumers, your residential.
Yeah.
But in the most recent facilities in Vancouver and East Vancouver and the Grandview area that are just leasing up, that mix has shifted almost to 50-50 with what we're seeing with commercial users.
Wow.
Because in Vancouver, industrial space is, hard to find, we'll say. I think the last report I saw said vacancy was about 0.1%.
It's just god awful out there right now for tenants.
Yeah. So if you're a plumber or an HVAC technician or someone who needs to keep supplies close to where you work in downtown, storage offers you the ability to essentially have an office/warehouse on a month-to-month contract for way less than you'd have to pay for an industrial space with no personal guarantees. If you want to close your business, move your business, you give them 30 days notice, you're out. But if your business expands, you can rent the locker next door and expand your business too.
Right.
And during COVID, we actually saw a lot of people who had inventory issues where, my store is closed, but all this inventory showed up. They rented storage to store their inventory.
Wow.
So it's really a nice flex space.
Wow. Before we came on, we were talking about this, and Adam was contemplating taking a garage and splitting it into 3 to rent it out as self-storage. And I think when you told him how much they were getting for a 5x5, I think
I'm doing the whole garage.
Yeah, the whole garage, the house, everything.
Yeah, exactly.
There's a company out of Utah called, I think it's Neighbor, where they allow, it's crowdsourcing storage. And I mean, I don't really get behind the idea of keeping my valuables in someone else's garage, but they raised about $25 million to build a company. So,
wow.
I'm doing the trunk of my car. I'm doing everything.
Yeah. All right, kids. We're sleeping in a tent because Daddy's getting 120 for your room right now.
Yeah, exactly. So, Pat, how easy is it to build these? How easy is it to get approval? Do you just need industrial land? Is that all you need?
In a major metropolitan center like Vancouver, it is incredibly difficult. If you came to me right now and said, Pat, money is no object. I want you to open me a brand new, shiny storage facility as fast as possible, I could probably give it to you in 4 years.
Wow. Now, does that also push the demand for these things when they're built from buyers because it's just such a challenge to get them?
Yeah. So what we're seeing now, and this is right from some of the CEOs of the major groups, Storage Vault, Storage Mart, Public Storage, is that the discount on a non-lease facility versus a lease facility, it used to be 30 or 40% because there's that lease up risk. Now it's less than 10%. In some cases, if you started leasing and you've hit 15% occupancy, you can sell it for a full stabilized value because it is so difficult to build. And
when you say stabilized value for the listeners, that's fully occupied. You're running your numbers as if it's fully occupied now.
Exactly.
Yeah.
Exactly. In Vancouver, the city of Vancouver, if you look at the industrial zoning in False Creek Flats, the first prohibited use is self-storage.
And is that just because they don't want, with the numbers so good, they want to restrict on? Because presumably we'll just be living in a bunch of self-storage. Is that more just to make sure that our industrial is diversified?
A big part of the issue cities see is that self-storage doesn't provide employment. A storage facility will have 3 employees. They never look at that part I was talking about where you have your trades using it or your businesses using it to generate more employment. I have a side hustle that does military flags and apparels with my former roommate, and we run it all out of the storage locker. We don't have retail space, we don't have storefront, and we just pay month to month. And that's a business that probably wouldn't run if we didn't have that option.
I think that could be our next episode.
Exactly. As much I'm holding back. I want to dive into that more than anything. But so hang on, Pat. One other thing about here is just thinking about if you can create a scenario. Like I'm thinking about, I think it's Nationwide, who has a space in East Van, and they're doing a lot of I think the business model is car wash with self-storage.
Yeah, that East Pender site, I actually did all of the appraisal feasibility work, everything for those guys. Just before I hopped on, I actually missed a call from the principal of that.
Oh, he's actually been on our other show. Yeah, and it's funny because I think one of the things is presumably a car wash is not adding more employment either, really. You only have maybe 1 or 2 people on site. So, I mean, I guess, is there a way to kind of bridge the gap where you can add more, to get around the zoning challenges with adding more employment by having maybe 2 businesses operating in one space?
Yeah, definitely. So usually in Canada, because we're behind the US in trends by 5 to 10 years, we look to the US to see what they're doing. And we're starting to see mixed use buildings in storage. If you go down to Miami, which is a place that I would tell people to never build storage because they have enough for the next decade or 2. You have ground floor, office or retail, and then in some cases, a restaurant patio on the roof of this storage facility. Because realistically, you building a concrete box, you can make it look however you want. So you make it look good, and then you put a restaurant on the top, and there you've created employment, you've created traffic, and then the city is a lot happier with that.
Wow. Just my mind's spinning of how many different businesses. Part of me thinks for my retirement now, instead of trying to buy a nice house on the water somewhere, I'm going to buy a self-storage place, put my house on the top floor, and just rent out all the closets below.
Right. So, I mean, what are, outside of the numbers obviously seem really attractive, but what are some of the other benefits of going into self-storage?
Yeah, so storage, nothing is recession-proof. I'll start by saying that. But storage has proven to be one of the most recession-resistant businesses out there. And typically, the front part of an economic downturn, you actually see storage use uptick when people are, downsizing their homes, closing their businesses, but moving stuff into storage because they think they may reopen. There's still that feeling that we're going to keep going. And then once people start moving, you get a lot more storage work there too. But the other thing is, and, I don't want to shout this too loudly, but the storage industry is completely unregulated by the government. I'm going to take off my William Wright hat for a second and put my Canadian Self-Storage Association hat on because I do a lot of work with them on a volunteer basis. And the Canadian Self-Storage Association is really trying to help with that, has done white papers on all locking, overlocking lockers, selling people's stuff, rental increases and all of that. But there's no restrictions on rental increases in the storage industry like there is in multifamily. So if you think you can raise your rates in your facility 20% and you won't have everyone move out, have at it. And we see that in very hot markets. I used to rent a storage locker in Victoria from the largest storage company in Canada, Storage Vault. I would, on a less than yearly basis, about every 9.5 months, get between a 12 and 19% rent increase.
Wow.
And their facility is 100% full with a waiting list. So you can really grow the revenues in storage way faster than expenses, and you're not burdened with governmental oversight in terms of rental increases. And, people are worried that may come, but we have, as the Canadian Self-Storage Association, approached the federal government, and they said this is a provincial issue. And then all the provinces said, go talk to the feds. So yeah, it's a great way that, these businesses can grow their revenue faster than inflation. So, inflation's a big topic right now. Well, storage can stay ahead of inflation.
Adam right now is performing out his garage with these. He's writing the rules down, figuring out how much.
Building out the floor plan here.
I got a spreadsheet I can send you if you want.
So this is my next question here is how long are these leases? I show up and I got to rent a storage locker for some golf clubs. Am I signing a month-to-month lease? Am I signing a 6-month lease? A 1-year lease? Like what am I signing up for?
And it sounds like there's no standard lease agreement. Like it's created by the operator.
It is. So typically you'll sign a 30-day lease agreement. More recently, some facilities have moved to a weekly, but then they charge you for 4 weeks at a time. So yeah, you'll sign between a 28 and 30-day agreement that just renews on the last day. You have to give them 30 days notice to vacate. And that's that.
And I would be subject to that price increase then. So if I'm there 6 months later and I get a notice that, hey, you're paying 112 now from 100, I'm subject to that.
Yep. There's a lot of places will give 30 up to 90 days notice that your prices are going up. But yeah, you're subject to that. So, unlike an industrial building where, all right, well, lease rates have gone way up in East Vancouver in the last 4 years, but we have a 10-year lease. We can't do anything until the lease is over. You can do something in 30 days. The other thing, that is a stability, and we go back to that whole recession resistant thing is, one of these new facilities will have over 1,000 lockers, so 1,000 tenants. Even if, one sector of the economy crashes, it's probably less than 10% of your facility. Whereas I'm reminded of when I was still in my appraisal days being just outside of Niagara Falls, doing some appraisal work, and I got on the highway and I drove past a shopping mall that had a Target and a Sears in it, and they had both just left Canada. That's a very bad day for that tenant or that landlord. But the self-storage guy, if he lost 2 tenants, it probably wouldn't even show up in his numbers.
Adam's texting his neighbor right now to see what his garage is doing, if it's available. So hypothetically, this revenue stream could grow 10, 20% annually as long as there's continued demand for this product.
Correct.
Wow. This is going to be the Vancouver self-storage real estate podcast here pretty soon with these numbers.
Cory's just shutting down the commercial brokerage side of his office spaces.
Exactly. I'm trying to see if we can get the word self-storage on our feature walls and all of our lobbies right now.
So Pat, maybe in thinking about, so it sounds really, really good. It sounds like the municipalities are and some of the zoning restrictions are some of the biggest challenges. What are some other challenges with self-storage?
Yeah, so you do run into situations where too many people think it's a good thing and build at the same time. There's some markets in the Lower Mainland, Abbotsford probably being one, that is slightly oversupplied with storage. So occupancies are being hurt a bit. You can't raise your rental rates because the guy down the street isn't, and he's got space, so your people could just move easily. And we've seen that in some other markets. Las Vegas would be one, Phoenix, the greater Phoenix area in the US. Another where people have overbuilt because it's a great investment. The thing is, because our population keeps growing, it'll fix itself. So it's a temporary thing. The other stuff is management. I mean, these are operating businesses. You have to run them every day. You don't just put up a storage facility and then collect the money. You're managing everything going in that facility, which is why we see cap rates in storage facilities being higher than the light industrial asset class by a bit, because a light industrial building, you lease it out, you have your property manager, and you just walk away and then come back in 4.5 years and renegotiate a new lease. Storage is a much more involved and active business.
What type of occupancies would say traditionally these places run? Are they running at 100% occupancy in the very, very busy markets? Or is there kind of a rule of thumb that you always want to keep 10 or 15% vacant for price increases? Like what type of occupancy could a purchaser sort of count on when they're trying to perform something out?
When I talk to an operator and they tell me that their occupancies are over 90%, my first thing I tell them is you need to raise your rates by 10%. In this industry, stabilized occupancy is around 88 to 90% because you always want that last 10% available. I won't quote which CEO it was in the storage industry, But he said to me, yeah, I never want to turn the guy away on Friday afternoon at 5 o'clock who just got kicked out by his wife and has all of his worldly possessions in his car because I have no space, because he'll pay anything. So you always want space to be able to raise rates. And that way, as you're raising the what we call the rack rate, or the street rate when people come in the front door, then you can bring the facility up to those new street rates. You say, well, this is what they're paying, so now all my existing people need to pay that too. Whereas if you're at 100%, you can't keep generating that revenue growth as quickly.
It's almost kind of like the hotel industry, where you keep a couple of rooms kind of open for those last minute guys. Like, well, you might show up and we'll pay anything. Well, Adam, that could be your slogan. Did you just get kicked out? Are you in the middle of a divorce? Call Adam. We got space.
Exactly. I just bought 3 sheds on Amazon while you were saying that. Delivered this week. What about insurance? Like, is there add-ons? Like, how does that work for, first of all, somebody who has their possessions at these self-storage facilities? Like, does the company offer like an add-on for insurance, or are you responsible for your own belongings?
Yeah, so that's an interesting question. And because we're BC focused, I'll talk more about what happens in BC than what happens in the rest of the country. The insurance regulators in BC, surprise, surprise, are very difficult to deal with. You have to be licensed to sell any insurance product. So in other provinces, you can buy content insurance over the counter, essentially, and insure your contents up to a certain amount. In BC, most facilities have gone a different route, where they just offer standard $5,000 protection plan with your rental. If you want to buy more, you can do that. They'll tell you who to call, and there's licensed insurance brokers to do that. Most people think their storage facilities are covered under their homeowner policies until they go home and actually read their homeowner policies, and it says anything stored off-site for more than 15 days is no longer covered. So that's something that people need to be aware of, that although you think you're covered, you're probably not. Having said that, other than some theft in some of the older kind of drive-up style facilities where it's easier to hop a fence and snip a lock, these new high security facilities are pretty hard to break into, very well security monitored and cameraed. So there's not a real theft issue. So you're just insuring for catastrophic loss, water damage, fire damage kind of thing.
And I mean, obviously you'd have to set up the facility so it's secure. So that would probably be, an added cost for getting up and running. Are there other things? I mean, I guess it's probably in terms of improvements that someone has to do to get these up and running. Is there a lower cost to barrier cost for entry, or what are your thoughts on that?
It definitely is. I mean, the nice thing about storage is you're not putting kitchens and toilets and bedrooms and carpet and everything in each unit. You do have the steel partitions, the roll-up door, the individual alarm, security cameras, all that kind of stuff. Your startup costs to demise building are significantly lower than what it would be to build multifamily. Additionally, you don't have to refresh the storage facilities nearly as often. The leading roll-up door manufacturer warranties their doors for 25 years or 100,000 uses. If you lose a door after 100,000 uses, I'd be asking other questions about why people are going in and out of that locker so much.
Right.
It's that 10% raise on the rents every 6 months.
Yeah.
The other thing I'm curious about, Pat, is when you're kind of running the scenario for where somebody should actually create one of these spaces. I mean, I guess there's the big question that a lot of people would have is, okay, I can rent in Vancouver, or I can rent in the city, or I can rent in, drive out to maybe Chilliwack or somewhere further out and save some money, especially if I'm going to be storing stuff for a long time. Is it mostly the small businesses that are like, what do you see the big difference of the type of tenant in the urban environments versus kind of the more kind of rural or suburban markets?
Yeah, so in the urban environments, we see smaller average unit sizes in storage facilities, just like we do in housing. The fact that we're building condos in Vancouver at less than 500 square feet on a regular basis with no storage, that are also selling for $600,000. People who buy those have money, and they have stuff they need to store. They have golf clubs, they have skis, they have Christmas stuff and all that. So that's what we're seeing in the downtown core. But, your example of driving up to Chilliwack, and this is one of the key tenets of storage that we don't like to talk about too much, is people are just inherently lazy. oh, I have to go get that for my storage locker, and then you have to drive to Chilliwack and back from downtown. It's not worth saving 50% of your storage locker if you got to be in the car for 2.5 hours. We see kind of cross shopping into a 5 or 10 kilometer radius, but that's about it. When people are looking to build these things, it's kind of that first rule of real estate is figure out where people are going and then get there first.
Yeah, makes sense.
My former client who opened this facility on Skeena Street, right next to the Grandview Walmart, the only Walmart in Vancouver. Well, when we were doing his feasibility work, I got wind that property was for sale. And it transacted, I think, 2 years ago now, and they're going to put 8 or 10 towers on that in the next 5 years. So he's leasing up at a very good pace today. But once 1,000 people move in across the street, he's full for the rest of his life. So, you have to have that longer vision on what you want to build too, and just understand that maybe if you're looking at the 2 year or the 3 year, it doesn't make as much sense as you're looking at the 5 to 10 year.
How competitive is this space?
Very. It's very, like, the operators, I'll start off by saying they're all very friendly and they all work together very well. But, Google AdWords for self-storage, last I saw, a self-storage click in Vancouver proper was worth $55.
Wow.
So your cost of acquisition is high because you know what these clients are worth. It's a very competitive landscape, and it's still a very fractured market where we have, these top 8 companies that are massive that own probably 30% of all the storage in Canada, and then all the other mom and pops underneath it. So it's competitive, but more amongst those groups than between those two groups.
Well, one comment you made when we were out for lunch earlier this week was the American REITs that I guess are the self-storage REITs haven't even got here yet. What type of market does it have to sort of get to where they start coming in? And if they start coming in, does that just put more demand, more pressure, pushing up prices even further now that you've got people from down south coming up here to acquire it because the numbers are attractive?
It does. I mean, the closest thing we have to an American company, we have kind of 2, which would be Public Storage Canada. Although, unlike Public Storage US, Public Storage Canada is privately held. And then Storage Mart, which is split between both sides of the border, and they're also privately held. The REITs will get here, but the problem, or maybe not problem, is for them to be willing to spool up their whole getting going in Canada and their infrastructure, they need purchases of over 500 million US. And there just aren't portfolios really of that size available. There's a few in the 1.5 to 2 billion, Storage Vault being a publicly traded company, but then everything's kind of in that 150 to 200 million range. So it's a very tough spot for them to jump in to get consolidation going. But having said that, it will happen. They're running out of things to consolidate in the US. And their next logical step is to come across the border. And that will change the Canadian landscape significantly.
Yeah, see, that's my problem. Why I'm not in that business yet, because I can't find anything over that $500 million mark that it really appeases me. So, GarageStorage.com by Adam Scalina.
Yeah. So, Pat, how does the average? So, a lot of people are listening to this and are probably thinking, how can I get involved, or can I get involved? Like, what is the best avenue for kind of more the mom and pop style investor? And are there opportunities? And then also thinking about it, like, and I don't know if you have a favorite REIT in the US that you think is a good investment, or ways for people to get involved in self-storage.
So there's a few different ways depending on what your amount of capital is. Your small facilities in BC are going to go for $2 million up to, you can spend a lot of money in BC, but you can find smaller one-off facilities and small communities for $2.5 million. That'll give you a good return, get your feet wet. There's other choices. You had mentioned Nationwide earlier. They do like an income trust type model where you invest with them and then they do all the work and then you just get paid. And I'm full disclaimer, I used to work for them as a educator for the investors, and I did all their feasibility work, but I'm a big fan of what those guys do. They do very good work. I think they're going to get ready to spool some more projects up in the near future, which is from my understanding. And then if you just kind of are happier with the public markets, Canadian, traded firm would be Storage Vault, SVI. They're the largest storage company in Canada. Stephen Scott's the CEO. I used to deal with Iqbal, their CFO a lot. They're great guys. They really know what they're doing. They've taken that stock from pennies up to 475, 485 recently, and they keep growing. Building is tough. It's a long road, even in smaller communities, but not impossible. And if you're looking to acquire, I will say that a majority of self-storage deals happen off market. So, find a knowledgeable self-storage broker, hopefully me, give me a call, and we can see if we can find some property for you.
Now, is demand this high across Canada, or is this more isolated to, say, BC and maybe Toronto, maybe Montreal, Quebec area, or is this something that's booming in Winnipeg as well?
It's funny you mentioned Winnipeg. Winnipeg is the most price-sensitive market I've ever visited.
That makes sense.
People will drive an hour for $5 a month. So Winnipeg, maybe not. But yeah, even Saskatchewan, Alberta, I like Alberta still. The price of oil has crept up to $75 while no one was watching. But yeah, BC is incredibly hot. And then anywhere in Ontario, Montreal, Quebec City, and then the Maritimes have started really taking off as well. They're experiencing a population and real estate boom out way east right now. And anywhere that has a growing population will need storage in the future. So it's hot across Canada. Even in the places I say it's not hot, that just means that it's normal. It's not depressed. You actually may see a facility come to market. It may be on market for a week or two, and then it'll sell. Whereas in BC, you'll very rarely see a facility actually be marketed as an open marketing thing. A lot of exclusive listings, a lot of pocket listings taking place. So yeah, it's an asset class that has gotten people's attention everywhere right now.
So is this something where I sort of follow the housing market per se, where I'm looking in like a Kelowna, or I'm looking in a Greater Victoria area where they're seeing massive growth year over year? Are these areas that self-storage companies are looking for, saying, hey, we need to get into that market, look at the population trajectory there? Or are they going more safer routes and saying, hey, that's too small for us to get into in case, Tom and Bill also open one down the street type of thing?
Yeah, the self-storage, the larger companies are very sophisticated. So, they're already in those markets. We've had 2 new storage facilities open in Greater Victoria in the last year, with another one in planning. A fourth one just got shelved for now. Kelowna, they've built a ton of storage, maybe not necessarily where they need it. If you want to store by the airport, feel free. If you want to be in West Kelowna, there's lots of storage there too. But yeah, these are markets where if you look at housing growth and population growth, as long as it's strong and projected to be strong, you're going to do fine in the macro. Maybe you might have a slightly slower lease up or something like that, but it'll work itself out.
Is there a market right now that you're seeing that maybe is underutilized, that's sort of an up and coming market, that if Adam's going to go acquire some more sheds and garages, that's where he needs to go, like say like a Kamloops or a Cranbrook? Is there something out there that people haven't got into yet that the industry is looking at?
In Metro, Tri-Cities is still fairly underserviced with the population growth they've seen there. Not a lot of great storage out there.
That's surprising.
I'm thinking in my head right now how big my garage is.
Yeah, like if you think of like Port Moody, there's no storage around there.
Right.
Pitt Meadows, there's no storage. Maple Ridge has a bunch of storage, but again, bridges are kind of an issue for people sometimes.
Yeah,
right.
So that's in the Metro. That's Chilliwack's always a strong market, although there's apparently 2 new facilities planned out there now. So that's the thing. You got to make sure someone hasn't beaten you to the punch, or it could be a very bad day. Delta as well. Very, very large demand that's unfulfilled in Delta Tawasin area. And a lot of that is because of land ownership out there. It's tough to find industrial land that isn't on a 99-year land lease. And a lot of investors don't want to go that route, although I think it could be a great route, especially with how aggressive the First Nations bands out there are on economic development. I think there would be a great JV opportunity if one of the bands wanted to get involved. And I've said that for a few years now. And I just, I think those in the Lower Mainland would be your markets. If you want to look sort of outside, your Okanagan, Kelowna's pretty built out. Vernon's getting a new facility right now. They're converting the old Canadian Tire. Penticton just got a new facility. So this is the thing. We're kind of going through a building boom, which happens about every 7 years. And then we play catch up and then we build again. But if you look at places like Fernie, I have a former client in Fernie who if anyone's looking, he would sell his facility. They're full because Fernie's growing so rapidly and housing's such an issue there. And that's where I think we're going to see a lot of the new people who enter the market is if you want to build, you're going to go to these smaller communities that are growing. Whereas, getting into, even in Kelowna, your industrial land is very expensive now. So it's quite an endeavor to put together the financing to do that.
There's a recent transaction in Kelowna, and I don't know if it's closed yet, but rumor is it was $1.66 million per acre for industrial land up there now.
What?
Yeah, just bonanzas. So just yeah. I guess a final question here, Pat, just more or less asking probably for a friend here. That self-storage space up there in Fernie, what do you think that would cost?
If you had $4.6 million, I think you could make a deal.
Yeah, no, I'm out.
Do you have an exclusive on it yet?
No, but I know the owner incredibly well. So.
Just kidding. Adam, I'm asking for Cory. Cory's already brokered the deal.
Adam, put your phone down right now. Pat, we have a 6-pack here called the MLG 6-pack. We ask you 6 lighthearted questions about yourself outside of the office. Do you have just a few more minutes for us?
Of course.
Okay, so the MLG 6-pack is brought to you by McInnes Law Group for all your commercial legal needs, from commercial leases to commercial closings. Please visit them at mlglaw.ca. All right, Pat, you ready?
I'm ready.
All right, first question up. Favorite movie?
I'm going to go with Shawshank Redemption.
Oh, so good.
I haven't seen that in years.
Yeah, that was a good one.
What is a book that you'd recommend all of our listeners read?
Grit by, I think it's Angela Duckworth.
Oh, that's a good one. Favorite vacation spot?
I'm partial because I actually grew up in Hawaii, so I go to vacation in Hawaii a lot.
You grew up in Hawaii? Wow.
I grew up in Hawaii, until I was 18, and then I came to UVic.
Wow.
Holy! So how does it take to leave Hawaii?
I was just thinking, like, what goes through your head when you're sitting on a beach in Hawaii having a Corona, looking at the blue ocean, thinking, you know what? I want to move to Victoria.
A very frank facts of life talk with your father about tuition costs.
Okay.
Oh, okay. There you go.
I gotta ask, where in Hawaii did you grow up?
Kailua on Oahu.
Do you know Dog the Bounty Hunter?
Is that your Hawaii reference?
That's all I got right now.
However, I have definitely seen him before.
Wow.
He wasn't chasing you, was he?
Well, if he was, he didn't catch me. So.
Okay. Just making sure, because you have a criminal background check done to have a license in this province here.
What are some a favorite quote or words you live by?
Goes back to my 6th grade math teacher, Mr. Cheney. And he says, if you want to be lazy, just do it right the first time.
All right, this is the question that everyone seems to either get stumped on or enjoys it. And when we're not pointing fingers here at Adam, but they stole it for their show. Favorite band or song? Favorite band or song?
Third Eye Blind, Motorcycle Drive-By.
Oh.
We've never had Third Eye Blind.
We've never had Third Eye Blind.
I feel like, is Third Eye Blind, I feel like that's a 90s band, right? Are they still around?
Oh, yeah, they're still touring. I was supposed to go down to see them in Chicago in late March 2020, but we all know how that turned out.
Wow.
Yeah. I haven't heard that name for a while. That's in your wheelhouse with you listen to a lot of 90s rock, right, Cory?
Well, I discovered that a lot of the stuff I grew up listening to is now on Rock 101, the classic rock station. So that's kind of where I have to go now. If I'm listening to Z95, I think my 6-year-old thinks I'm nuts.
Right. And last question, what is one piece of advice you'd have for listeners?
In terms of self-storage?
Sure. Let's frame it there. So someone who wants to get into the self-storage business or acquire it through an investment, what is one piece of advice you as the self-storage authority in Canada? What would you give them?
hire the right experts and listen to them.
Very good advice.
So on that note, Pat, how can people get a hold of you?
You can email me at pat@williamandwright.ca. William Wright, sorry, not and Wright. Or call me on my cell phone at 250-589-0034.
Well, thanks so much for taking the time today, Pat. Really appreciate it. And it was a great conversation.
Yeah, thanks for sort of exploring that asset class for our listeners.
Yeah, anytime.
All right, there you have it, folks. Our interview with Pat Wood of William Wright Commercial in Victoria, self-storage specialist, the authority, the only one, all the above. The guy is incredibly knowledgeable, and I haven't met anyone that knows that much about self-storage ever.
You can tell, right? I mean, it was such a good conversation. We covered everything, all things self-storage with Pat. I really appreciate him being on the show. I'm so surprised at the numbers and that space as just an asset class
just crazy
in general. We were kind of talking about it off air afterwards and kind of thinking about all the different companies and how creative it is. Like the car wash, when you think about car wash just as like a cash machine, and then you think of self-storage, it's so smart to just marry the two, right? I mean,
it's just like you're going to your storage unit, you drop something off, get your car washed, drive away later, and they take $200 out of your pocket.
There's got to be a laundromat added to that somewhere. There's got to be.
Well, if you go to the one in Coquitlam, there's a McDonald's there, so you could literally spend the afternoon. That's like, it's perfect.
That's a day. That's
honey,
a Sunday.
Honey, where are you going? I'll be back at 2.
Yeah, exactly. 3 Happy Meals later.
Third Eye Blind.
Yeah, that was a funny.
Third Eye Blind.
I kept thinking. So I confused 3 Doors Down, 3 Days Grace, Third Eye Blind. There's all these 90s bands that were really into the 3, right? And they all have mashed into one band.
And don't forget your favorite, 98 Degrees.
That's
98 Degrees.
Yeah. I only listen to bands with numbers in there. That's my rule of thumb. But Third Eye Blind is I feel like I can't remember what the song is, but I'm going to be adding that to the Kokomo Life playlist.
Life, yeah, that's definitely. I hear that and I think about. You know, you're in high school.
Simpler times.
Yeah, I'm in high school. I'm jumping off the local bridge into the river in Palmettos.
Yeah.
I got to have a quick shower after because I'm going to IGA to work in the afternoon to go stock the produce. Like it's just like life couldn't get any easier.
Your high school sounds amazing. I'm picturing mine is I'm stuck in a locker. I just got shoved in there. I'm crying.
Yeah.
Well, and I'm listening to Third Eye Blind.
If you weren't wearing your 98 Degrees shirt to school,
that's the problem.
That could have been part of the problem.
That was the problem. What else do we got before we cut for the day here, Cory? We've had some great episodes on the Vancouver Commercial Real Estate Podcast lately. We've got some great ones coming up. Cory, any other projects we want to talk about or anything before we cut for the day?
Well, we talked briefly about last episode about the success of the West Shore Business Park, which I think we're getting up to that 40% range. Maybe I'm over exaggerating. I have to double check the numbers, but we're hovering in that 40% range now on offers written, under contract, and or firm already. So tremendous. And I know they're fielding calls over there almost every day.
Yeah.
We got a lot of exciting projects in the pipeline coming down the pike. And then, we got some great stuff happening in Kelowna up there that we're going to talk about in a future episode and what's going on up there. But just, everywhere in the province right now, it seems like it's really, really going in the right direction. And businesses are reopening and there's excitement and optimism. So we definitely got no complaints.
Fantastic. And if anyone wants to get in touch to discuss commercial real estate?
Yep. They can reach me at Cory@williamwright.ca. They can always go visit our website, williamwright.ca, or they're welcome to call our Vancouver office, 604-428-5255. And we'll put them in touch with the best broker in their marketplace anywhere in the province to help them either sell, acquire, or lease space.
Awesome.
So when people are looking to download the latest on the VCREP or the VREP stuff, where can they find that stuff, Adam?
Yeah, Cory, you can head over to VancouverRealEstatePodcast.com for all things real estate, including the Vancouver Commercial Real Estate Podcast, Vancouver Real Estate Podcast. We're also available on all the different podcast players out there, including where I'm now just getting it. It took me forever to get into Spotify, and now I've just signed up for Spotify. We're going to actually be adding the Kokomo playlist. We're doing a Spotify playlist that's going to be public, and it's going to be on the site. So we're adding, not only have we stolen the band question over at VREP, but now we're actually doing a playlist. So we'll probably add the VCREP VREP playlist and put it on the site so people can download that playlist.
And are you guys going to kind of do like the old Green Day stuff where like you listen to the last song, 2 minutes goes by, and then your 98 Degrees pops on like a secret song?
Yeah, there's going to be a secret song
at the end?
It might just be me, you, and Matt doing 98 Degrees. The harmonies will be on point.
We were talking about getting this stuff onto YouTube. That is the episode that we got to launch with you guys dancing and singing to 98 Degrees.
You just got to follow us on TikTok. Just kidding. It doesn't exist. Anyways, have a great week, guys.
Thanks, guys, for listening.
Subscribe today.